how to pay your mortgage off faster without strict budgeting. Is it even possible? It is. It's really super possible, and I'm going to show you how you can do it. Now, do you need to have control of your income in order to pay your mortgage off faster? Yeah, you actually do, all right? Like if you're getting paid and money's coming in and you don't really know where it's going and your cash is just disappearing out the window and you've got no idea where your money's going, well, you're not really going to achieve any financial goals when you're living your financial life like that. So you do need to have control over your income, no doubt about that, okay? But one of the problems is that it's pretty hard for most people to stick to budgets and know where all their dollars are going, and this can get really difficult and people kind of get flustered and they don't really know. So I'm going to show you a couple of examples or a simple way that you can do this without having to stick to a simple budget. And this is the way that I operate my own finances. I don't like tracking every dollar, and I don't want to have an app on my phone to check and code everything as if I'm an accountant. I don't want to do any of that. I want a simple way to operate my money. I'm guessing that you do too, because this is how most humans think, all right? Now I'm going to put this in the context of two different and very common type, because if you're wanting to get control of your money and pay your mortgage off faster, it's probably very likely that you've heard of revolving credits and offsets. So I'm going to put this in the context of revolving credits and offsets. And I'm going to explain to you why I prefer one over the other, okay? So here we go. I've got two examples here on my whiteboard, and the one at the top is my revolving credit example, and the one at the bottom is my offset example. Okay, so with the revolving credit example, this is what usually happens, or the way that most people use these types of facilities is that they have their income getting paid into their revolving credit, and then out of their revolving credit, they're paying all their living expenses. You know, they're paying their mortgage and their rates and their insurance, and they're buying their groceries at the supermarket, and they're buying clothes for their kids, and they're doing everything out of the same account. That would be a pretty common way of using a revolving credit. Now, can you see how this could be a problem for a lot of people? Using this method has actually got an extremely high failure rate because you've got all your cash inside basically one account, okay? So how are you meant to know what money is for what purposes? It's all mixed in there together. The only way that you can really make that system work is if you are prepared to run a separate side-by-side spreadsheet or be using some kind of online app to map where every dollar goes. I've found over 13 years of helping people pay their mortgages off faster that this system works for something like 3% of the population. And if you happen to be one of those 3%, then sweet as, go for it, right? But for 97% of the population, this just doesn't work because it's just too hard to track money, okay? Now, I want you to think back to your grandma and granddad, and how did your grandma and granddad track their money? Well, the most common method that was used back in the day for tracking money is what you might call the glass jar system or the pot system or the envelope system. Because back then, most people got paid in cash, right? So when the cash came into the household, they often had a number of different envelopes or maybe different jars. And like there was one envelope that might have been for the shopping and another one that could be for petrol for the car and so on. And this is how that generation managed their money, by putting money literally in different pots or different jars or different envelopes. And as silly or basic as that might sound, it actually worked because this is it works with the way that humans think. It works with human behavior. And so this is something that we've discovered ourselves over teaching this stuff to people for over 13 years now, is that if you want to get different results with your money and with your mortgage, then you've got to start with human behavior. Because if it doesn't work with human behavior, no one's going to stick at it for very long and it's going to fail. So our bucket system that we created that works with an offset type loan does exactly that. It's basically just the digital version of having your money in different envelopes, right? So in the revolving credit one, we've got money coming in. It's a big mess of everything. How are you meant to keep track of everything? Hard to stay on top of. With the offset version, you've got your income coming into this account here at the top. So I've called that the bills account here at the top. So that's the bills account there at the top, and your income comes into that, but that's also where you pay your bills from. So that would include your mortgage, your rates, your insurance, your power, your internet, etc. Okay? So it goes directly out of there. I didn't draw an arrow for that. Let's do that. There you go, out there to pay your bills. That's what that is. And then you see these other arrows here. I've got multiple arrows. Now this is sending portions of your income automatically off to some of your different bank accounts, right? Or your different envelopes or your different pots. We call them your buckets. Okay, so whatever you want to call them, envelopes, pots, glass jars, buckets, it's all the same thing, right? But these are basically different bank accounts. And so this is the digital version. And because the great thing about modern technology is that you can say, I want $100 each pay cycle to go off to a different bank account, and you can put that on repeat, and now it's going to happen automatically, right? So that's what these arrows are here. It's sending money automatically off to these different bank accounts. So I've got groceries there, for example. So you would make a plan in advance around how much you're going to spend each pay cycle on groceries. So let's say you get paid weekly, and you might say, yep, I'm going to spend $300 a week on groceries. So that means every time you get paid, the day after payday, $300 goes into your groceries account, and now you've got $300 for your groceries, right? Now, the great thing about that is that if you go down to the supermarket and you spend $250, you can look at that bank account and you can see, I've only got $50 left. And you know that you've got to make that last $50 last you through to the end of the pay cycle, right? You can do this for every other type of expense that you have. So what do we call this? We call this bank account accounting. And this actually works with human behavior. This is how you can track your income. This is how you can track your money. This is how you can pay your mortgage off faster without having to get a spreadsheet out, without having to track every dollar that you spend, right? So I've given you that example there for groceries, right? You're going to put, say in this example, $300 a week goes into your groceries account. You know that's all you've got for the week. Get to the end of the week and you've spent your $300, then that's it. You got to wait for the next $300 to come in, and then you can start spending again, right? The next bucket that I've got here is a Christmas bucket. So who's ever got to Christmas and they've thought to themselves, oh no, I don't have enough money to pay for Christmas. Well, what if you made a plan right at the beginning of the year and you've said, we're going to spend X amount of money at Christmas, and that's going to be like for food and for presents. And so then you decide how much that is. You divide that by 52 because you get paid weekly in this example. And every week, a little bit, 1/52th goes into that Christmas bucket. So by the time you get to Christmas, there you go, that money is sitting there waiting for you. So you don't have to go into debt or borrow money to pay for Christmas. Cool, right? Then the next one I've got there is for cars. So that could be car maintenance, or it could be for your petrol, right? But you're giving yourself an allowance or a budget or an amount that you're going to spend on cars each pay cycle, okay? Same for your clothing, and same for this nice big fat one down the bottom here, holidays. A lot of people say to us, people that have worked with us, that have gone through this system and put it all into place, people say to them all the time, how do you afford to have such awesome overseas holidays? This is how they do it, okay? They decide how much they're going to spend on that holiday, and then a little bit goes into that holiday envelope or holiday bucket every pay cycle. So when it comes time to take that holiday, they pull that cash out and they pay for it in cash like a boss, all right? No having to borrow money, no paying off the holiday after the holiday has been finished. This is like paying for your life in cash like a boss. And this is the way to live, right? If you want to get ahead financially, this is the way to live. Because isn't it better to be able to have your buckets worked out and then pay for stuff in cash? Isn't that better than borrowing money and then paying for stuff after you've bought the item and paying interest on it and penalties and all that kind of stuff? You know, who wants to do that, right? You're playing someone else's game, but here you're playing your game. You're taking control of your own money. So one of the principles that we're really big on at FutureBound is the principle that your income is your most valuable asset. And I really want you to think about that your income is your most valuable asset. Because when you understand and you truly understand that your income is your most valuable asset, then you make different choices with your income and you start applying much more wisdom to your income. And this is a simple way. I've only got 6 buckets here. The way that we coach people to do this, often it's starting with about 8 to 10 buckets in year 1, and then year 2, you can even go up to more buckets than that, all right? But this is using an offset system. Money's coming in, and in case I don't think I mentioned this at the beginning, I should have, but all of these bank accounts are linked to your mortgage. So because you've got money in these bank accounts, it means that not only are you taking better control of your income, but that money is offsetting against your mortgage, meaning that you're paying less interest on your mortgage, meaning that your mortgage comes down faster. Pretty cool, right? So there you go. I hope you learned something awesome there today, guys. This is just a really simple way, a simple method that anybody here in New Zealand right now can start to implement to have better control of their income. And then you put this together with a strategic mortgage debt reduction plan, and boy, you can see the sparks start to fly. I hope you found that interesting and you've learned something here today. If you want to find out more about what we do at FutureBound and you want to learn a little bit more and continue this journey with us, then I want to invite you to come to 2 live sessions that we're having just in May. So in mid-May, we're having our 2 road shows. One of them will be in Wellington and the other one will be in Auckland. The Wellington one will be at the Balcott Heritage Golf Course in Lower Hutt. Plenty of free parking there. And the Auckland one will be at the Remuera Golf Course. Also lots of free parking there as well. And I want you to come along, bring your spouse or partner, bring your friends, and come along and listen to us for a couple of hours as we go through our 3-step proven process for a couple of hours and explain to you all the different parts of it. There'll be about some drinks, there'll be some food there. Come along and meet us. And then, by the way, the week after we've done the live sessions, there will be an online version as well for the people that can't get to Wellington or Auckland, but they still want to listen to what we've got to say about this. That's what the online versions will be about, so that you can still watch if you're from a part of the country where it's too difficult for you to get to Wellington or Auckland. Great. Thanks for listening, and hopefully we'll see you before too long at one of the road shows.